Thanks for joining us on lunch. This is BloombergQuint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. The Nifty and the Sensex gave up morning gains to trade marginally lower. Yes Bank and IndusInd Bank lead the declines.
Auto sales continue to fall in September. Bajaj Auto, Maruti Suzuki, Ashok Leyland witnesses a 20 to 55% decline.
The government is looking to sell its entire stake in BPCL and Shipping Corporation of India Limited. That's news coming in from Bloomberg via sources.
The government maintains its borrowing plan for the remainder of the fiscal year. The centre will raise 2.68 lakh crore through rupee-denominated bonds.
All right, let's first take a look at how markets are faring. Yatin is here with us. Afternoon, Yatin.
Good afternoon, Iran. The markets have been under pressure for the last one or two trading sessions. In fact, today also the weakness continues. However, after some kind of pressure, we are finally almost flat in terms of the trend on the Nifty. Even if you look at the advanced decline ratio on Nifty 50, 17 stocks advancing to 33 declining. What's leading is BPCL. Of course, the government decided to divest a significant portion of their stake in various PSUs, including BPCL. So that stock is the top gainer on the Nifty 50 and quite active on the future and option segment. 5.5% up for BPCL, opened almost 8% higher. Mahindra and Mahindra, remember today we have a strategic announcement. There will be a press conference at 4:30. And ahead of that announcement, the stock is also quite active, 3% up for that one. Also, they reported their monthly numbers, which we will discuss in detail later in the show. HDFC, IOC, as well as HDFC Bank are the other stocks which are gaining traction as far as trading activity is concerned. Yes Bank, want to mark that stock, especially the stock was up almost 4.5–5% in the morning. Now has slid to the lowest level, in intraday trade, 12% down for that one. So almost a 20% kind of a movement intraday. And remember, from the recent highs in August 2018, the stock is down 90%. Even if you look at it from a YTD basis, it's down 80%. So clearly the pressure mounting on Yes Bank at this point in time. IndusInd Bank, Grasim, as well as Coal India, the other frontline Nifty stocks which are losing traction in trade. In fact, IndusInd, as we speak, is down 5%, and another 3% down coming in for Coal India. And also talking about Maruti Suzuki as well as Eicher Motors, these are again the two stocks which have been quite active in the future and option segment today.
Thanks, Yatin. Hold the thought. Let's talk about the automobile space, where automakers don't seem to have managed to push out a lot of vehicles from the factory gates in September. So the dispatches from factory gates continues to be weak?
Yeah, Harsha, it's continued to be weak, and in fact we were speaking to SIAM president also, Mr. Rajan Vadera. He said that a lot of buyers had postponed their sales in the month of September because a GST cut was anticipated. So the GST cut has not really come in, but the entire September month has passed on a weak note. In fact, if you look at the wholesale numbers for Maruti Suzuki, that's down by about 24% on a year-on-year basis. Even if you look at the key segments, which is the mini car segment as well as the compact car segment, there we have seen significant amount of dip coming in. In fact, the total compact car sales are down 23% and the mini car segment down 43%. Similar is the case with Bajaj Auto. Their overall sales were down 20% to come in at 4.02 lakh units. More importantly, the domestic motorcycle business is down 35%.
Wow.
Clearly, this signals that the inventories at the dealerships are quite high. Billings has been probably postponed, and in order to get rid of the dealer inventory, the wholesale numbers have been clearly impacted. CV exports are also down by 17%. Ashok Leyland, another interesting one, 41% decline in the total medium and heavy commercial vehicle sales. The total sales, including the light commercial vehicles, is down 55%, though on expected line. So more or less they have met the analyst expectation. Mahindra and Mahindra also came out with their numbers. The tractor sales are down 2%, of course owing to good monsoon. However, the management does believe that there is some kind of pickup which can be seen there. And their automotive sales are around 22%, again on expected lines, wherein the UV sales are down 30% for the auto major.
Yatin, thanks for that. But the retail registration numbers will probably make automakers at least a little bit happier. It actually went up last month. Sajit Mangat is joining us with the data. Sajit.
That's right. The few things which is playing out in the retail space, especially dealer sales. One is inventory destocking, which is happening, and that's primarily because many of the manufacturers have stopped, pushing sales to the dealers there, so there is a huge destocking which is happening, which is getting played out now. And second is the heavy discounts which many of the dealers are now giving for cars, scooters and commercial vehicles, and that's also an incentive for people to go and buy there. And the third one being the festive season. We saw some of the festive season in mid-September in the southern part of the country, and now we have Dussehra and Navratris which are coming in. So especially 2 days of Navratri, so a huge amount of registration coming in. On a total basis, you have a month-on-month jump of 24% for all for auto sector as a whole, and on a YOY 23.5%. Two-wheelers have seen 23 plus percent month-on-month and 23% YOY. So there's a healthy registration of two-wheelers happening. But just point here that the biggest inventory which is there in the auto sector is in the two-wheeler sector. So there is a lot of offtake which is happening there in two-wheelers and three-wheelers, especially three-wheelers, where we are seeing the offtake being more than 40% jump in terms of registration which is happening there. So these are the two and three-wheelers. In the passenger cars, 23% and 28% kind of jump which we are seeing, again led by heavy discounts which is happening, and early walk-ins and a lot of registrations that have been piled on towards the end of the month, and that's what is pushing this sales there. And commercial vehicles, though many of the commercial vehicle makers have had done shutdowns and brought down their factory gate sales, but now we are seeing some pickup happening on a month-on-month basis, which is 29%, and on a year-to-year basis 11%. So that's heartening for them. Tractor sales continue to be strong for the last 3 months. That's primarily led by monsoons. On a month-on-month, it's gone up by 8%, but we saw the maximum jump happening July and August, and on a YOY it's up 45%. So that gives you an indication of how monsoons played out for the tractor sales.
Sajid, thank you for that. The other big story, the government is looking to sell its stake in BPCL and Shipping Corporation of India. An official told Bloomberg News that a proposal will be tabled before the Cabinet Committee of Economic Affairs really soon. Siddharth Singh now joins us on the phone line with more details on this one. Siddharth, what do we know?
Basically, yesterday the panel, the core group on disinvestment headed by the Cabinet Secretary has basically made a recommendation to sell the entire stake in Bharat Petroleum as well as Shipping Corporation of India, and about 30% stake sale in Concor. So this, I think after the details of the meetings are once they come to the disinvestment department, they will immediately take it for a formal approval of the Cabinet Committee on Economic Affairs. So that should happen very soon. Simultaneously, what they're doing is that they're putting in the process for appointing transaction advisors, asset valuers, as well as legal advisors for these 3 stake sales. And along with this, we would also see the NTPC taking over the state-owned hydro company called NIPCO, as well as NTPC taking over THDC and NHPC taking over NIPCO. So all these things, and they are targeting the current financial year, they are looking at to complete all these stake sales.
So thanks so much. Those are big, important companies there, and I think the government is clearly pinning its hopes on divestments to fund the increased deficit that will result from a stimulus announced from corporate tax cuts. It does look like, though, that they intend to maintain their borrowing target. That's what they said yesterday. Nikunj Johri is joining us with the details of the borrowing plan. Bond yields lower by about 3 basis points this morning.
The government will stick to its borrowing plan for the remaining 6 months of the financial year amid concerns that the government would miss its fiscal deficit targets after a surprising corporate tax reduction announced by the finance minister. This corporate tax rate cut led to expectations that the government would borrow more from the market, but the government would now borrow only the remaining 2.68 lakh crore rupees in the remaining 6 months, that is October to December period, through 17 weekly auctions of 16,000 crore rupees each, and the remaining 2 auctions would be of 14,000 crore rupees each through various maturity buckets. There's one more important update. The Economic Affairs Secretary has said that the government will at present borrow only through rupee denominated bonds, signaling that the government's sovereign bond issuance plan announced in the union budget may not go through. Economic Affairs Secretary has said that the government is still deliberating on the pros and cons of such an issuance, and this sovereign bond issuance itself the government needs to deliberate more on its structure, the pricing, and the current market conditions. And at present, the government is still deliberating that. So there are signs that the government will not go through with the sovereign bond issuance announced in the union budget. Over to you.
Because thank you so much for that. Meanwhile, India's fiscal deficit widened marginally to 5.53 lakh crore in August. That's 78.7% of the 7.04 lakh crore budgeted for the current financial. But it's not as bad as the 94.7% of the target seen in August last year. If you look at the components, capital expenditure stood at 1.36 lakh crore, or 40.3% of the budget estimate. Revenue receipts stood at 30.7% of the target. Tax revenue at 24.5%, and non-tax revenue at 63.4% of what was budgeted for the year. The current account deficit shrank to $14.3 billion, or 2% of GDP in the first quarter of this financial year. This stacks up against the 2.3% witnessed in the same period last year. Higher services receipts and remittances at the time of lower import demand helped in rein in the balance.
Meanwhile, we've been continuing to track the story of Punjab and Maharashtra Cooperative Bank, PMC Bank, which was put under restrictions by the Reserve Bank of India last week. Now, it was a hectic day of activity yesterday. Firstly, an FIR has been filed in the case, and the confession letter of PMC Bank's former managing director, Joy Thomas, has come to light, which gives us a sense of how this entire story actually played out. Just flagging off some of the build-up of the crisis, the relationship between the Vadhavan family and PMC Bank actually goes back all the way to the 1980s. The bank was started in 84. In about 86, they had a crisis because their net worth had been eroded just within 2 years of starting the bank. That's the first time that late Rajesh Kumar Vadhavan helped the bank by infusing 13 lakhs into it and also parked a huge quantum of deposits for the revival of the bank. These are all details put out by Thomas in his confession letter. Now, that wasn't the only time the Vadhavan family helped the bank. In 2004, again, the bank was facing a run on deposits, and once again, Rajesh Kumar Vadhavan parked 100 crore to tide over the liquidity crunch. Now, over this period, at some point, the company or the group, Vadhavan Group, had started to borrow from PMC Bank as well. And Joy Thomas in his letter says that almost 60% of the bank's business was coming in from that particular group. And they say it was profitable business because they were charging anywhere between 18 to 24% interest and were earning very good profits. Now, what happened after that? Well, at some point, the tables did turn. It was first the Vadhavan family helping PMC Bank, but then it turned in the 2011-2013 period when the Vadhavan Group started to face its own liquidity pressures, and Thomas blames the cancellation of HDIL's slum rehabilitation project for that. At this point, it seems they started to run overdues on some of their loans, but PMC Bank continued to show them as standard accounts because they believed that these loans would eventually be cleared. That's what Thomas has said in its letter. Now, I think one of the questions being asked is that how did this escape detection? Because this is a story that has been playing out almost for 6-7 years, perhaps even longer. Well, Thomas in his letter actually says how they escaped the detection part of this. Firstly, they said that when the statutory auditors came, due to quote-unquote paucity of time, they only looked at a few accounts, and these accounts did not actually figure in the investigations. He goes on to say when the RBI investigators came, and after 2017, these investigations had been tightened. At that point, the bank actually created dummy accounts to replace the legacy accounts of the Vadhavan Group. And these dummy accounts were split across so many number of accounts that they didn't get captured in the RBI's inspection, which tends to look at the top 10 accounts. Finally, he goes on to say that, look, it became too much for the 6 people who were involved in this entire crisis, and we decided to fess up in a letter and then a subsequent meeting with the Reserve Bank of India. Now, I'm just going to briefly mention that, of course, Joy Thomas's lawyer said he will not respond. The HDIL group has put out a statement this morning. They've been quiet so far, and what they have said is that all of their accounts are fully audited and reflect a true and fair picture. They added that in relation to borrowings from PMC, they have sought an appointment with the administrator in charge to also discuss a strategy on how best to unravel some of these issues. And they add that they will take all necessary steps and extend full cooperation with any and all agencies during this period.
This morning, Crisil Ratings has come out with its half-yearly credit report, which not surprisingly shows a sharp jump in downgrades. Advitra Palepu is here with some details.
Good afternoon, Harsha. So Crisil Ratings has come out with its credit quality report that said that in the first 6 months of FY20, this fiscal, around 1.4 lakh crore worth of debt instruments were downgraded by the agency. This is compared to around 40,000 crores worth of debt downgraded in the first 6 months of FY19. Essentially, demand side problems, profitability problems, funding challenges across sectors are what causing the downgrade, as well as some willful defaults by several large corporates, and the NBFC crisis has also created some large slippages amongst financial firms. Further, if you look at the ratio of the value of debt downgraded compared to upgraded, it has dropped to about 0.25 times in the first half of FY20 compared to 1.65 times in FY19. So a ratio above 1 times means that more debt was upgraded than downgraded compared to other periods. So this clearly shows that there is a deterioration in the corporate credit quality. This is because economic problems, this is because of funding issues, this is because of demand side issues that the companies face in today's environment, is what the rating agency said.
All right, Advait, thanks so much for that. The Indirect Tax Adjudication Authority has imposed a 58 crore penalty on ABB India for willful tax evasion. The company could face more trouble as authorities mount prosecution of top officials. Nikunj Ori is joining us with the details. Nikunj.
GST Adjudicating Authority has found ABB India Limited guilty of willfully evading tax and suppressing of facts. The GST Adjudicating Authority has imposed a penalty of 5.8 crore rupees on the company, which is equivalent to the amount of tax that is said to be evaded by ABB India Limited. The company has denied any wrongdoing and has said that it would contest the matter in a higher court. There's more trouble coming in for the company as GST authorities are contemplating initiating prosecution proceedings against the top officials of ABB India. This is according to an official who is involved in the investigations against the company. According to Section 132 of the CGST Act, a taxpayer, if a taxpayer is found guilty of willfully evading tax, he or she shall be punishable with an imprisonment term of 5 years with a fine. This case relates to the company has said that it has already deposited the principal tax amount with interest, so there's no need, there does not arise any need to initiate prosecution proceedings or prosecution filing if the GST authorities are contemplating the same. This case relates to ABB India misclassifying its products under a lower tax slab, which helped the company in evading tax of about 5.6 crore rupees, according to the investigation of GST authorities. Over to you.
Thanks for that. A spike in refining margins and fuel price hikes are expected to help oil marketers report strong earnings in the September quarter, but the gains may be partially offset by inventory losses and a slowdown in consumption. Samit is standing by to tell us what to expect.
So if you see the state-owned oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, are expected to report a strong quarter in the second quarter of financial year 2020 on the back of higher refining and marketing margins. However, some of these positives will be offset by an inventory loss and a tepid growth that we have been seeing when it comes to fuel consumption. Now, Brent crude, that is the Asian benchmark, now though it rose the most on one day because of the Saudi Aramco attack, their gains were short-lived, and if you see throughout the quarter, the crude prices have trended lower. Now, because of this, there's a possibility that the oil marketing companies would report an inventory loss. And if you see the next chart that we are showing up, usually whenever the oil prices, crude prices have averaged lower compared to last quarter, all the three oil marketing companies have reported an inventory loss. As you can see in the first quarter of financial year 2018, when crude prices averaged lower at $50.8 per barrel, all the three oil marketing companies had reported an inventory loss of close to 6,244 crore rupees. Similarly, in the first quarter, now in the second quarter of financial year 2020, crude has averaged lower at $62.1 per barrel, and all the oil marketing companies are expected to report an inventory loss in this quarter. Now, if you see the Singapore gross refining margin, that is the Asian benchmark, now that averaged at around $6.5 per barrel. Now, this is the highest now this $6.5 per barrel is the highest in the last 6 quarters, while the jump compared to last quarter, that is 86%, is the highest seen in at least the last 8 years. Now, this is on the back of refinery shutdowns and ahead of implementation of IMO 2020. Now, this $6.5 per barrel GRMs is expected to benefit the refining segment, because that means means that they will earn higher by converting every barrel of crude into fuel. Now, if you see on the marketing segment, unlike the last quarter, in the second quarter of financial year 2020, the gross marketing margin earned by the oil marketing companies on sale of every liter of petrol and diesel, now that averaged higher at 3.7 rupees and 3.4 rupees. Now, on the back of this, the marketing segment is expected to report a good number for the oil marketing companies. Now, what had happened in the first quarter was the companies were not able to pass on the hike in crude prices to the consumers because of elections, but in this quarter, the hike in petrol and diesel prices were much ahead of what the crude prices were, and that's the reason they were able to earn higher gross marketing margin on sale of every liter of petrol and diesel. Lastly, if you see on the consumption side, the consumption has remained tepid in the July and August month. As you can see here, it was close to 17,685 million metric tons. That is a total fuel consumption, and in this and in the month of August also it was close to 17,000 million metric tons. Now, because of this tepid fuel consumption, the growth on the top line front could be a bit lower for the oil marketing companies, but on the operational front, the numbers are expected to be good because of a higher refining margin and higher gross marketing margins.
Thanks so much for that, Somit. In international news, Chinese President Xi Jinping exuded confidence during one of the biggest celebrations in modern Chinese history. He called for stability in Hong Kong, unity among ethnic groups, and the complete unification of the country at the 70th anniversary of the People's Republic. Bloomberg's Tom McKinsey was on the ground during the celebrations in Beijing and sends this report.
As you can see, the mass organised celebrations here in Tiananmen Square in central Beijing continue. We're seeing tens of thousands of people who have taken part in this organised event, one of the biggest of its kind in modern Chinese history, as you say, marking 70 years under Communist Party rule. One of the highlights of today was the military parade that involved 15,000 troops. It involved hundreds of tanks and armoured vehicles, and also China showing off its missile might with the unveiling in public for the first time of an ICBM, intercontinental ballistic missile, that has a range to hit the United States, the Dongfeng 41. So the military parade was in focus. This is a civilian parade behind us. And then we had a speech from President Xi Jinping talking about the need for unity and stability, the party's role in providing that, and also a nod to Hong Kong, saying that one China, two systems should continue to be upheld. But really today is about trying to portray and put out an image of the party that is in control of a China that is growing economically and militarily and politically strengthening as well, despite, of course, the major domestic challenges and international challenges that the Communist Party, President Xi Jinping and China face.
Tom McKinsey reporting from Beijing. Out of time on this show. Thank you so much for joining us today.